If you are the one with boots on the ground doing the deals, flipping the properties, for example, what is the best way to meet limited partners or investors who are going to invest in your deal? And for the limited partners who have the cash to deploy, how can they meet the people with the boots on the ground doing the deals?
I had problems raising capital for deals that were amazing, that went on to produce 20 plus 30% returns because I was in the wrong room. You know, for those that have read my book, you can grab a copy of that at raisingcapitalforrealestate.com. I pitched this deal that was a mobile home park fund deal that crushed, but I was in a room full of people that had never invested in real estate before. If they're going to invest in real estate, are they really going to invest in a mobile home park deal for their first ever deal? And I just didn't understand the concept of like, what do you have to do to get in a room with curated people that are already thinking about this stuff that you don't have to convince?
Hey guys, welcome to the Deal Room. It's Stacey Olinger here. I'm on with Presley Hambrick and Hunter Thompson, who is our featured guest speaker for January, our January meetup. And the meetup is about real estate investing. So anybody who's interested in real estate investing, anybody who's doing deals, anybody who's a landlord, fix and flipper, wholesaler, multifamily, raw land, self-storage, you should definitely come on down and be in the room because that's where all the magic happens. Hunter, will you please say a few words on what you're going to talk about in January on the stage?
Yeah, so look, I'll be honest with you. Usually I like to start these things off in like a super upbeat thing, but the reality is I'm disappointed. I am disappointed because I don't see people acting out what they're saying. And anyone listening to this, I'm confident you think this is like a once a generation opportunity for wealth creation, and I'm just not seeing it. You got to show me something. So, what I'm here to say is that we have to start digging wells right now if we're going to drink. And what I want you to be focusing on is raising money when times are tough. It's way more difficult to raise capital when deals are good. And it's difficult to raise capital right now, which means you should be trying to raise a lot of money. And so everyone that's listening to this right now, like I want you to take a second and think about your business and think about what's the number one thing that's holding you back from really maximizing the next 18 to 24 months that you and every well-trained economist and market analyzer thinks is coming, which is remember when everyone said survive until 25? Well, why is that? It's because it was going to be tough because of interest rates and overdevelopment until 2025. And then by 2026, it's going to have been so obvious that only an idiot didn't take advantage of it. And by the way, that's coming from someone I started my career in 2011. And so by 2016, when I would show my track record to people, they would say, well, that doesn't count. You bought in 2011. Well, let me tell you
Mm.
something. It counts in your bank account and it counts in your investor's bank account. So I want to do the deals that people go, well, bro, it doesn't count, dude. You bought that in 2005, 2025. And you go, yeah, that's right. I want those deals on my track record that are too good to be true. And we're heading into one of those climates right now. So the only thing holding you back, though, is being able to fund those deals because investors are getting bombarded with negative economic information. They're scared. They've heard about deals going south. They think interest rates might rise. They think markets are oversupplied. And there might be some truth to that, but those are marginal. The difference between buying right and buying wrong will make or break this next section of your career, but you've got to be able to raise the money to do it. And that's what I'm here to talk about today.
Amen, amen. What do you invest in, Hunter?
So I own a company called ASIM Capital, and we buy multifamily properties in Phoenix, Arizona. I used to raise money for other operators' deals. And so what that means is the people overseeing the deals and managing them and such. I used to just act as a capital placement agent or just show up with the money. 2 years ago, we made the decision to just go all in on one asset class, but I have raised money for basically everything under the sun. Mobile home parks, self-storage, non-performing notes, crypto, ATM machines, you name it, kind of done it. But I feel like as an investor, you want diversification. As a business owner, there's a lot to go with things like vertical integration, specialization, hyper focus, rinse and repeat, relationship, software that you can use over and over again. And so that's what we decided to do.
Awesome. What kind of vertical integration do you guys implement?
Well, I mean, number one, being hyper focused, like we have access to deals all over the country, like most people that If you know how to show up with money, all of a sudden you have all these friends in all these different niches. And so we know how to show up with money. But we put that all to the side because when you look at a 40-mile radius, in our case, it's Phoenix, and say, we just want to dominate this market, what does that mean? Relationships, first cracks at deals, brokers take you seriously. You're going to lunch with them. You're playing golf with them. When I'm talking to a family office and they say, how often do you plan on visiting the property? They don't want to hear once a quarter. They want to hear, I drove by it on the way to work. Like
Hmm.
that's the correct answer if you're an institution in a family office. I'm not to say that anyone's wrong for not trying that other strategies, but as an investor, it sounds a lot better if it's like we're actually 4 miles away from the property right now. You know what I'm saying? So with having said all that, when you do go hyper focused, it doesn't necessarily need to be a geographic location, but like one strategy, for example, one niche, one software. You can really go deep, and as a business owner, going deep is really all it takes to be extremely successful. In fact, I'd make the argument that's very difficult to be successful without going deep. So
I
that's the answer to
agree.
your question.
Couldn't agree more. Why did you choose Phoenix?
Couple unique things. Again, nothing against any of these other markets, but just answering your question honestly, right? So, like the most of the multifamily operators out there that talk about Florida and Texas, I love those markets. We deeply considered looking at Florida and Texas. To be honest with you, the hurricane risk is something that if we're starting from scratch, we're going to build $1 billion portfolio. I don't want every October to be like, hold on to your butts. You know what I'm saying? Like, I think everyone would agree they would rather not take that risk. Not to say it's not worth it, it's not priced in. You get where I'm going. You'd rather not. But there's another thing that's associated with those risks, which is insurance costs. So those markets experience massive unpredictability of insurance cost rises. Now, in all fairness, they also rose in Phoenix because insurance costs are rising because insurance companies have been getting eaten. And so they try to spread out the gains or losses all over markets all over the country. But it's not the kind of thing where it's like they 3x randomly. You know what I'm saying? So that's one. Or two, if you include the hurricane risk itself. The other one, though, is that similarly, property taxes are limited in Phoenix to 5% increases per year. So you take two major risks from a balance sheet perspective or a, operating expense perspective, insurance risk and property tax risk, and they're just way more predictable. And plus, we already did 9 deals in Phoenix before we made the commitment to go all in on Phoenix. So that's your answer.
I love it. I love it. I'm so excited to hear you talk in January on the stage. Guys, you really need to be in the room. He is dropping nuggets and bombs of just a wealth of information, just and his passion and his excitement just oozes out. So you really just have to experience it and be in the room with it and surround yourself with high caliber people. Can you guys talk about how your network is your net worth and why you should be in the room? Presley, would you like to talk about that?
Oh, yes. Having the right network is so phenomenal, so phenomenal. I can recall an event with a friend of mine, and they were starting a fund, and his network was in the room, and I was blessed and able to be in the room with him. And hearing the guys talk, they said they wanted to start a fund, and because of their network and their net worth, they were able to start the fund with about $800 million to start. So if you have the right friends, if you have the right connections, if you have planted the right seeds, raising money, finding deals, just like Hunter says, if you're in the right areas, you want the brokers to know who you are. You want the brokers to be inviting you. You want the off market deals to find you and you not be looking for the deal. So, having those connections is the most significant thing you can do in any kind of business, especially if you're doing anything real estate related. Um, you can write a check based on who you know. So, make sure who you know is the right people and not people who are going to drag you down or not be a great influence on your profit margin or deal flow.
Excellent. Just one more question before we go. Hunter, can you talk about if you are the one with boots on the ground doing the deals, flipping the properties, for example, what is the best way to meet limited partners or investors who are going to invest in your deal? And for the limited partners who have the cash to deploy, how can they meet the people with the boots on the ground doing the deals? Can you just talk briefly about that?
Yeah, well, first of all, I gotta I started this out by being like, yo, I'm disappointed in you guys. But the reality is that's what I needed someone to tell me when I was getting started because I wasn't playing big enough. I wasn't going all in. I wasn't really seeing the opportunity for what it was. Like I said, I started in 2011, right? Everyone's saying, this is a back the truck up moment. This is a back the truck up moment. But my question for you is like, how big's your truck? Because I was like, yo, I don't have a truck at the time. 2011 is like, I got a golf cart. I'm trying out here, but someone needed to tell me, you need to go and buy a truck. And to buy a truck, you got to raise the capital, my friends. So the answer to your question, though, is that when I got started, I had problems raising capital for deals that were amazing, that went on to produce 20 plus 30% returns because I was in the wrong room. For those that have read my book, you can grab a copy of that at raisingcapitalforrealestate.com. I pitched this deal that was a mobile home park fund deal that crushed. But, I was in a room full of people that had never invested in real estate before. If they're going to invest in real estate, are they really going to invest in a mobile home park deal for their first ever deal? And I just didn't understand the concept of like, what do you have to do to get in a room with curated people that are already thinking about this stuff that you don't have to convince? And I'll just tell a story real quick and I'll wrap up. In the movie Inception, there's a
I
really
love that
important
movie.
line, same, where one of the actors is like, hey, don't think of purple elephants. So, well, what are you thinking about? Right? Well, everyone's thinking about purple elephants, but the reason you're thinking about it is because I said it. And so it's not really this organic thought. You don't want to have to try to simulate that crazy path that you went on to find Stacy and to find Presley here in a 20-minute lunch you have with some random rich person. Meaning that, what'd you have to go to find them? Listen, I love them. I respect them, but they're not the most famous people in the world, right? You had to go searching for them. You weren't taught. You didn't grow up a real estate investor, most of you. What happened? You went to school, found out you've been lied to, you started to read Rich Dad, Poor Dad. Maybe you found out about Stacy and Presley, and now you start to go down this massive rabbit hole. And now you're an evangelist. You can't wait to go share this stuff with everybody. But what happens when you do that? They haven't gone on that journey yet. They're not ready to hear that stuff. So, I'm here to talk about, I'm doing a session at their event, and I'm excited to talk about it. But most importantly, when you get in full of a room full of people that have already gone on that journey, it's way easier to push them across the finish line. In fact, you don't have to push them at all. You just simply show them where you want them to go. And if it makes sense, they'll move. That's the kind of rooms that I'm in now, never pitching to cold audience and stuff like that. So, that's what I would say people should do generally and also specifically. So come to the meetup.
Awesome. Yeah. So the meetup is in January and Raise Fest is in February. Tell us the dates of Raise Fest.
February 20th through the 22nd. I'm not going to give away too many speakers right now, but the weird peace sign dude that like schooled the entire industry on a very creative way of doing deals. He's going to be there, and some other like $100 million capital raisers, $1 billion assets under management type of people, and me, so check it out. You can check it out at raisefest.com.
Yeah, you'll be hearing all about Raise Fest and more and how the market's doing in January. January 25th, Thursday night, 6:30 to 8:30 is when Hunter's going to be live in the room and you'll get a chance to meet him and shake his hand. Does anybody have anything to wrap up?
It's an honor to be on. Super grateful.
And we are so honored to have you on as well. And yes, please read the book. The book is amazing. I read the book when it came out, and yeah, no regrets.
Yeah, I tried to put as much as I could in there because I knew that as soon as I was done writing it, things would change. So go read it. And then if you want to get the updated version, come to the meetup and we'll take it from there.